Intel stock ticker INTC, just released some devastating news if you are a shareholder for the company. They just announced that they're going to be reducing their dividend to 0.125 per share every single quarter as part of a policy reset. That is a 65.8% decrease from their prior dividend. So that is a huge cut to their dividend. That's going to give them a forward dividend yield of 1.92%. And keep in mind, before that dividend cut, their dividend yield was sitting at around 5.6%. So again, a huge decline in that dividend overall. Now, the argument from Intel is this is going to help them reallocate their capital in a way to create long-term value. And that might be partly true, but if you're a current shareholder of the company, this is definitely not news that you want to see. And this is a company that's really been hammered over the past year. You can see they're down almost 42%. Over the past month, they're down about 12.48%. It'll be really interesting to see how the market responds to this news that was just released. But let's go ahead and jump over to my stock valuation spreadsheet and see how the new news comes into our valuation output. So we'll go ahead and plug in INTC and hit enter. And you can see all of this data is going to load in. Obviously, this dividend data hasn't been updated yet because it's very new news, but at its current dividend yield, it's around 1.92% now. The payout ratio is going to be significantly reduced, so obviously it's going to free up a lot of free cash flow for the company to be able to do things, hopefully gain back some market share. But let's go ahead and jump over to Graham's valuation. And this is kind of a unique valuation scenario because the company is really not projecting any growth for the next 2 or 3 years. So typically I think the growth rate would be closer to 0 in that scenario, but I think after year 3 or 4, we're going to start to see some higher growth rates. So you can see for this scenario, I'm projecting a growth rate of 2, low earnings per share, current yield on AAA corporate bonds is currently pretty high. So when you plug in all those factors, we come to an intrinsic value of just $16.42 per share, a lot lower than the current trading price. Now, when we jump over to the discounted cash flow analysis, again, we have kind of the same scenario. Essentially, I'm projecting no free cash flow growth for around 3 years. And then you can see I have a little note right here. After 3 years, I'm projecting 4% free cash flow growth. I think that's very attainable with the recent dividend cut. They're going to have a lot more free cash flow to use to hopefully continue to grow the business over that time period. So after that, obviously, I take the present value of those future free cash flows and add them together, add the company's cash and subtract out their total debt to get that equity value. Once I divide by the shares outstanding, you can see we actually still come to a fairly high discounted cash flow price per share of $35.50. So that is still kind of positive news for INTC despite the dividend cut. And when we jump over to the multiples analysis, obviously what we're doing is we're looking at how the market is valuing companies that are similar in structure. So we can see these companies here, average price to earnings of around 13.5. And if we jump over to the stock screener, we can see INTC is pretty close to that range as well. So unless we see some movement from the market due to the dividend cut, it looks like INTC is fairly valued compared to their competitors. Now let's get over to what everyone wants to see, and that is our dividend discount model. This is definitely going to be shaken up quite a bit due to that dividend cut, but essentially what we're doing is we're valuing the company based on how much they pay in dividends and how much that dividend is increasing over time. And over the past few years, they had a pretty good record of, growing that dividend of around 5% a year. You can see you had 4.8, 5.3, and 5.04% dividend growth. Then obviously the huge dividend cut that we just saw, down a little bit over 65%. So now we need to project a growth rate for that dividend moving forward. Obviously the huge cut is going to lower the valuation quite a bit, but I think a dividend growth rate of around 4% after this dividend cut is probably going to be pretty safe. With a discount rate of 8.5%, that still only gives us a dividend discount model price per share of $11.56. Now, there's still a lot of unknowns about what the growth rate will look like in the short term. Obviously, they might want to focus on using that free cash flow in other ways for the next couple of years. We don't really know yet, so we really might not see any dividend growth for a couple of years, but after that, I do think a 4% growth rate will be very attainable. So when we jump over to our output tab, you can see our intrinsic value. It seems like it's just climbing lower and lower as we follow this company. We have Grams at 16.4, multiples at 26.23, discounted cash flow at 35.5, and dividend discount model at 11.56, giving it an intrinsic value of $22.42, a little bit lower than that current trading price. So definitely not a good sign. Even with just a 10% margin of safety, we can see our acceptable buy price It's $20.18. I'm definitely not really interested in adding more shares to my portfolio. I own just a little bit of INTC in my portfolio, not a whole lot, but definitely very disappointing news from the company. I think it's correct. This probably is a good move for them long term, but as a shareholder, obviously, I want to see growing dividends over time. This company has really failed in that aspect. Definitely really tough news for anyone who is a current shareholder. But there you go. There's a quick update on INTC. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.